What is the difference between a debt and a loan? Debt is like a broad term covering all kinds of obligations you might have. It could be about real estate, money, services, or anything else that you owe someone. On the other hand, when we talk about debt in the world of corporate finance, it gets a bit more specific. It's often tied to the money raised by a company through the issuance of bonds. Now, a loan is a type of debt, but it's more of a focused deal. It's like a specific agreement where one party agrees to lend some money to another. So, in a way, you can think of loans as a subset of the larger debt category. They're like cousins, related, but not exactly the same. Imagine you borrowed $1,000 from your friend. That's a loan. The $1,000 you owe is a debt. Now, if you also owe $500 to the local store, well, that's also part of your overall debt, but it's not a loan because they didn't lend you money. It's like your financial web, connecting all these different things you owe to different people. In the business world, things get a bit more complex. Companies often need a lot of money to grow, so they might issue bonds. When you buy a bond, you're essentially lending money to the company, and in return, they promise to pay you back with interest. This whole setup is a form of debt for the company. So, to sum it up, debt is this big umbrella term covering all kinds of obligations, while a loan is a specific type of debt, a deal where someone lends you money and you agree to pay it back. It's like the difference between owing money to a friend and owing money to the bank. Same concept, just different flavors. And hey, whether it's personal finance or the financial dance of big corporations, understanding this difference can help you navigate the money maze a bit better. Because, let's face it, in the world of finance, a little clarity goes a long way.